In recent years, banks have adopted customer lifecycle management tools that aim to transform customer experience. By developing complementary technologies to work alongside current banking systems, RegTech company Encompass can expand the value of existing CLM processes. Joe Pearson has more.
In the decade following the global financial crisis, banks felt the full wrath of regulators. They were hit hard with enforcement actions, fines, and settlements estimated at £245 billion globally. Spending on compliance was ramped up to an estimated £206 billion a year, or roughly 10% of a bank's operating costs. So, with predictions that regulatory costs could double by 2022, banks are looking to new technologies to help them keep compliance costs under control and help them know their customers better.
Knowing your customer is a bit like knowing a city. There are first appearances. But true understanding takes time and a closer look. You could uncover many different and sometimes confusing pathways and connections. And although many of these buildings just look all the same, inside any one of these walls, there could be a major risk that threatens your business. So with so much to explore, how do you work out which one?
Roger Carson and Wayne Johnson were victims of financial crime, an experience that cost them millions.
So we developed a platform that allowed you to visually connect to all the sources of information you need to build a picture of those you do business with. And that was really the genesis of the company, through the difficult experiences that we went through.
The Encompass platform was developed in Australia. Roger and Wayne took it to the UK at a time when banks were being fined billions of pounds by regulators. That's when they realised they could solve a global problem.
We realised that technology and automation was the only way that the large banks and the large corporates could address the problem that they had with the regulator, which was to be able to show the regulator that they were executing their policy or their procedure the same way every time. And that was the main problem the regulator had.
Encompass automatically collects and analyses data from multiple primary and premium sources to uncover beneficial ownership. Intelligent Process Automation builds a comprehensive KYC profile, helping analysts make faster and more confident decisions. Former Chief Risk Officer Stephen Allen understands the pressures of making the right decisions in a world where KYC obligations are arguably beyond the scope of manual analysis.
Complexity you get in the corporate world is enormous, and of course the interconnections are complex. Today we're at a point where there are tools like Encompass that are real, working in production environments, solving problems today, and they offer all the benefits that technology has to bring you: accuracy, speed, repeatability. And they allow you to bring in a standardization of process that you'll never get with humans on their own.
An advantage of the Encompass platform is that it can be integrated with a bank's existing onboarding or CLM system, automating costly and time-consuming data gathering processes for a greater return on their RegTech investment.
This is all about customer service. We're saying to a bank that first of all, you can have your customers onboarded faster.
How much faster?
Well, in some cases, we believe that we can do this in minutes or hours, as opposed to days or weeks, or in some cases, months. We're looking at time savings of in the region of 80 to 90%.
We can improve the compliance, but also reduce the cost. And that's an important aspect because that cost is passed on to the bank's customers. So it's not just a banking cost, it's a cost we all have to bear. If we can improve that compliance, help to reduce money laundering, and provide a dividend to the bank in doing so, it's a great outcome for us all.